In this video, we discuss HIMS and HERS health. This has been a massively talked about stock on both of our channels, and we're trying to decipher, has HIMS and HERS got a lot of runway in the short term, or are there going to be some turbulent times ahead for the company?
What are your current thoughts on HIMS and HERS at the moment? Because I remember a few weeks ago you posted a video on HIMS and HERS, and your thoughts were similar to mine after the earnings, and it was a bit like it's still good, but with the run that it's been on and a few things that happened in the earnings that could have been a bit better. What's your current position on HIMS and HERS at the moment?
Okay, HIMS is a very interesting company. Very interesting. I think I've done more videos about HIMS than anything else. I just wanted to ask real quick, when did you first buy HIMS? Because you were I think you were like the OG HIMS YouTuber, right?
I've had it for a few years now, yeah. I first came to me from a member of the private group, and when it came through a SPAC and it dropped down to single digit, and he said, have a look at this. It looks really interesting. It's dropped. All the hype's kind of come out of it now. And I remember looking at it and I was thinking, wow, this actually looks really good. It's growing really well. Profits ramping up on it. The healthcare space is massive, and they're going to do, pretty significant amount of profit when they scale up. And I remember it dropping down from to $8.
But you doubled down when it was at 3, so that was before it crashed all the way down to
I just continued to buy, $6, $5, $4, catching the falling knife, you know me. And I just remember like making videos on YouTube about it, and the earnings were incredible. That every time they kept bringing them out, and the market just kept sending it lower and lower. And I just didn't know why, because I was looking at gross margins at 90% or 80%. Revenue kept growing at 40%. The profitability was starting to move up to a break-even point of view, and you could see the profitability ramp starting to come. And the market just kept ignoring it, and all the metrics kept going up. And one of the big negatives was that the revenue growth was only being supported by high sales and marketing spend. And I was thinking, well, it's just not true, because if you work out the sales and marketing percentage to revenue, it's coming a less and less of a percentage. So sooner or later, they're going to hit that inflection point where it's getting less and less, and that's just going to spot more revenue growth, and that's all going to go to the bottom line. But the market ignored it, and eventually it decided to realize. I mean, maybe it was a whole 2022 situation why the stock market just kept sending it lower, lower, and lower. But I think there was a lot of signs there that it was always going to work out for it.
What was interesting is, like, obviously, yeah, most SPACs they've now like failed, right? But you're right, like HIMS was under that SPAC label. I think it got like bumped in with all of those other guys, and obviously, yeah, like 2022 market crashed and HIMS crashed hard. It was kind of like, but if you actually look at it and value it as a SPAC at that original $10, which would have been what, a couple of billion in market cap, maybe like 2 billion of market cap at $10 a share. They actually didn't look that expensive relative to the growth. So then they crashed. I agree. $3, it was an absolute steal. And I bought my first shares in November 23 at about 8, and posted my first video about them, massive video in October 24. But to come to your question about what I actually think now, yeah, I explained in this video. I mean, first things first, like, they're a 0 to 1 business. They are completely disrupting one of the most like archaic, slow to innovate industries in America, where people are used to innovation. Gen Z, millennials, used to doing things the 21st century way. Healthcare is not that. And couple that with the fact that the US has a relatively unique healthcare system, where it's just extremely complicated, and HIM simplifies all of that, hence the 0 to 1 approach. So yeah, the last earnings I didn't like, and they were the first earnings that I didn't like since I invested in HIMS and HERS. So I've seen about 6 earnings calls since then. And the main thing is that we agree on the point, they're just going through a transition phase. The fact that you could work out, so from their non-GLP-1 revenue, you could work out that was flat, at least quarter on quarter. It's not to say it's going to be flat year on year, but I think we'll probably see that non-GLP-1 normalize, so like 15-20% year-on-year growth. And as the GLP-1 situation starts to stabilize and we don't get insane GLP-1 growth anymore, or we may do a bit because they're now working on in Canada, etc. But it's not going to be the same explosive growth that we saw. We may just see actual reported revenue growth slow down a bit in the short term to like maybe 20%, maybe even less. Who knows? Because this is the thing, is that most of the things that they're working on now, they've got all of these new verticals, but they've not quite deployed yet. We may not see that show up in the numbers yet. And my point is there were so many people since the start of the year that all hopped on the GLP-1 bandwagon. You know, let's not forget that towards the end of the year, yeah, HIMS was trading between $20 and $30 a share, bouncing around there, and that felt high because a couple of years previous it had been at $3, $8. And I just think all the people that hopped on this GLP-1 bandwagon and kind of just like have seen this almost, we had a quarter of triple-digit growth, didn't we? And last quarter, I think the year-on-year revenue growth was 70%. Then we're going to see a slowdown, even though we've got all of these beautiful things going on in the background, which I really, really like. You know, I love the fact that they're expanding internationally. I love the fact they're focusing more on preventative healthcare, because that's a massive, massive industry that I think a lot of people champion. As humans, we all spend way too much of our lives sick. So I love what they're doing. And the most positive thing about that earnings call was Dudum reiterated the guidance, right? 6.5 billion in revenue for 2030. If HIMS are still growing 20% plus, 8 times sales is quite a good multiple on that. And then you get 52 billion market cap, and they're at 11 billion at the moment. So that's nearly a 5x. I'm not saying they're going to 5x, but if they actually hit that and continue to grow, 8 times sales is all right. 20% FCF margins at 8 times sales is 40 times free cash flow. But it's a big if. So now I think it's a bet on the management team, a bet that they can actually work on the new business areas. I just think that there's a few people that are going to be scared out the stock. I don't think we're going to go up to 100 in a straight line, but still a good long-term business. So it's still a holding of mine. I just can't make it a 20-25%. It got up to 38% of my portfolio at one point. Had to trim that. So yeah, that's my thoughts on HIMS and hers. Yeah, how about you?
Yeah, it's funny that I remember saying where it was coming up more and more of my portfolio. It was getting to the point where portfolio just moved where HIMS and hers were going on the day.
Yeah.
But yeah, I think my thoughts are very similar to where you're at the moment. Worth pointing out though still that they're in this healthcare space that's a massive TAM, and every time they launch some of these new products into these healthcare spaces, they're not just entering like £1 million TAMs, are actually entering, some of these TAMs are worth billion of pounds, and if they do execute to the standard that they've been executing previously, they're going to have a lot of success with it. However, the problem that HIMS and hers currently have is that this is a company that has been accelerating massively up to these 100% growth rates. And it's just starting to see that slow down now with this GLP-1 business at the moment, and some other areas of the business are starting to slow down inside the business at the moment. And, all these people have jumped in for this hype of this 100% growth rate, and then all of a sudden you start going down to 80, 60%, 40%, is that we know the market's very short-term thinking, and all these people that have been rushing in will then panic and move out the stock. And even though if this company grows at 20, 30% rates in the longer term, it's still going to be okay for HIMS and hers. The problem is that in the short term, we see the market panic, and when it starts dropping at those sort of growth rates, what we'll see all of a sudden is we'll see a company that used to be trading at the 60 times earnings will drop down to a 40 times earnings because it's just not growing as much. And it doesn't sound much, but a drop to 60 times earnings to 40 times earnings is about a 30% drop, which I think right now, I think HIMS and hers is actually on a 30% drop at the moment.
Is it 34% below all-time highs? You mean
something like that? Yeah.
Yeah. I think that's about right. Right. Okay. Yeah. I mean, look, the thing is that there are two things. It's going to make it exceptionally volatile, right? You and me are definitely going to be on a journey. We're both still invested in HIMS and hers, and HIMS is going to be a journey, and it's going to be a fun journey. But obviously, number one, you've got massive interest in the retail community. And Dudum's acknowledging that, which is great. I'm sure like the HIMS House podcast, but they get questions on the HIMS earnings call, which I really respect. They had Dudum on the podcast themselves, so massive respect to them for being able to do that. But you've got a massive surge in retail interest in HIMS, which I didn't see so much when I was investing in late 2023. So that makes it volatile. And then you've also got the short interest. So you've got over 30% of the float being borrowed. So you've got a lot of leverage on the HIMS share price. So either way, it could be very volatile. And I think if we get a negative or just a bad couple of quarters where they're saying, oh yeah, we've got all these growth opportunities, look at our growth opportunities, but our core growth has been flat again, or our overall growth is now down to 15, 20, the stock could shoot back down. I don't think in the short run it could get sort of lower than 2025. I think that's a good support where, because there was a lot of pre-GLP-1 investors investing in it at that point. Of course, if it goes very positive, then you could get a lot of momentum coming out of a short squeeze. And there's still like a lot of uncertainty about how they're going to piece together the rest of their business. But all I can tell about HIMS is that it's a ride. It's going to be a ride. So much has changed in the last 2 years. Mad respect to the management team for doing a great job. And they did get from founding in November 2017 to crossing over $1 billion in annualized revenues in 2024. So that's 6.5 years. And that's on par with what Amazon and Alphabet were able to do. Not many companies can go from literally an idea in someone's head to $1 billion in revenue in 6 or 7 years. So either way, even if they don't become the multi-$100 billion company that they could be, massive respect to what they've done so far. And Dudem's still a very young guy.
With just on the last point here with HIMS and Hers, just on your positioning in the portfolio, it was your largest position in the portfolio. Where are you at now with your position on HIMS and Hers? Has it come to still a top 5 holding? Is it a mid position? Is it a smaller position? Where are you at with HIMS and Hers at the moment?
It's actually one of my smallest holdings.
Well,
yeah, so it was at about $60 a share. I reduced it quite a lot up to that point. And at about $60 a share, I cut it to about 4.5% of the portfolio. And obviously now it's lower than that. Like the share price is lower than that. So the weighting's probably gone down to about 3.6, 3.7. Yeah, so it's still there. But yeah, I think that it's just not got the same risk reward that it did. That's it. Like I'm very happy with where it's gone, and you still look at it in less than a 2-year period. I've 6x my money, even though we're way off all-time highs. I mean, and you've done even more than that, right? Because you've been dollar cost averaging down. But yeah, I just didn't think that it represented the same insane opportunity it did in like 2023, early 2024. What's your weighting?
Yeah, for me, HIMS and Hers is actually still my number 1 holding. The only difference is that it used to be far away my biggest holding, and now it's just slightly above my second holding, which is Google at the moment, which makes me feel a bit better. Maybe it should actually be a little bit smaller than where it still is. I guess the big difference in the position at the moment is that obviously, like saying, a lot of my average was around the $6 mark. So the gains that I have really are not actual my invested amount gains, if you know what I mean. If it was actually money that I invested, it might be a bit of a different story. But the money that I have invested into HIMS and Hers is actually a normal size positioning, if you know what I mean. So it's a lot of it is paper gains. So if it was actually money invested, I might be a lot keener to trim the position down. But because a lot of it isn't really my money that's invested, I think I'm a little bit happier with that weighting to sit a little bit larger. So yeah, that's where I'm currently at with HIMS and Hers at the moment with my positioning.